Hi, I'm David Schenck. I'm an attorney and enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today we're going to talk about injured spouse relief and innocent spouse relief. They sound alike, but they aren't the same thing, although they both get at the same idea. If you or your spouse are being unfairly held responsible for a tax debt that was caused by the other spouse, you may be entitled to some relief. Both of these kinds of relief only apply to spouses who file jointly. So we're going to start with injured spouse relief. Injured spouse relief is when you and your spouse file jointly and are entitled to a refund. And then, instead of getting a nice check, you get a letter from the IRS saying that they will be keeping that refund and applying it to an obligation of just one spouse. And this can be because of unpaid back taxes, and they can be either federal or state taxes. The IRS collects for state back taxes as well. It can be because of unpaid student loans or unpaid outstanding child support. You may be thinking, well, wait a minute. I don't owe any back taxes or student loans or child support. It's not fair of the IRS to take my share of the refund too. And it might surprise you to learn that the IRS agrees with you. If this is your situation, the IRS is taking your share of a joint refund to pay the individual obligations of your spouse. You may be eligible for injured spouse relief. But it's not a 50-50 thing. Generally, the IRS is going to look at the return and kind of decide what the refund would have looked like if you had filed separately. And then they're going to determine how much the injured spouse will get back. Let's look at an example. Let's imagine that you and your spouse file jointly and expect a $2,000 refund. But the IRS takes it and applies it to a back tax debt only of your spouse. So it wasn't from some previous joint return. It was from some prior spouse-only return. If you file for injured spouse relief, then the IRS grants your application. But you probably aren't going to get back 50% or $1,000. The IRS is going to look at your relative income and withholding versus your spouse's, and they're going to allocate the refund according to their formula. So if you earned roughly 40% and had roughly 40% of the withholding, and your spouse earned 60% of the joint income, then the IRS is going to give you about 40%, or $800 in our example, as injured spouse relief. And it's different in community property states. And there are 9 states in the United States that are community property states. If we assume a generic community property state, and there's no such thing because of the 9 community property states that we have, there are 3 different ways to do the calculation. But if you look at the example above, the IRS may look at the figures like this. Okay, the refund amount is $2,000. And because this is a community property state, they're not going to have to go through the allocation of who earned what. In community property states, both spouses are considered to have earned all of the money. So they're going to take the first $1,000 and they're going to apply it to the back taxes. Because 50% of the $2,000, that's your spouse's 1/2 interest in the refund. And you may be thinking, great, I get back the other $1,000, which is more than the $800 we got the other way it was figured. But no, then they might look at that other $1,000 and say, well, 1/2 of that belongs to your spouse as well, as a spouse's share of the refund that they're going to be returned. So they'll keep half of that as well. And you end up with $500. And this calculation is going to be different in different community property states. One thing to remember about injured spouse relief is it's not automatic, and it's something that you have to file every single year to receive the benefits. So if your spouse, for example, has back taxes in the amount of $10,000 and they took $1,000 from this year's tax refund, and there's still a $9,000 debt. Well, next year, they're going to take the entire refund again unless you again file for injured spouse relief. It has to be filed for every single year. Okay, moving on to innocent spouse relief. So what's innocent spouse relief? Innocent spouse relief also only applies if you and your spouse file jointly. When you file jointly, the IRS holds both you and your spouse jointly and severally liable for any tax due. And jointly and severally liable is a legal term that basically means both parties are liable for 100% of the tax due, and they can collect from either you or your spouse, or from both of you, at their option. And even if you later divorce, you remain jointly and severally liable with your spouse for the tax due. Okay, so now imagine that you and your spouse file jointly and pay your taxes for the year 2021, and as required, you both sign the return. Unfortunately, you divorce in 2022. Then, in 2023, you receive a letter from the IRS saying that your spouse had gambling winnings in 2021 of $100,000, which was not reported on the return, and that you are responsible for the extra tax due, jointly and severally liable along with your spouse, but that means that they can try and collect the entire tax from you, or from your spouse, or from the two of you. Well, in this situation, you may be an innocent spouse because you were unaware of the extra income. And you can file for innocent spouse relief and essentially try to shift the entirety of the extra tax onto your spouse, who in our example is the person who earned the income and didn't report it. It's the not knowing that makes you an innocent spouse. If you had known, then you would not qualify as an innocent spouse and you would not get the relief. If you had known, you will remain jointly and severally liable with your ex-spouse for the extra tax due. So while it's relatively easy to qualify for injured spouse relief, the first one we talked about, really all you need to do is not be liable on your spouse's debt, have filed jointly, and have some right to the refund. Innocent spouse relief is much harder to acquire. Not only must you not have known, you must not have had any reason to know. So if we go back to our example, where there's an extra $100,000 of income, if we imagine that the reported income was only $50,000, and then the IRS looks and sees that you were buying new cars, taking vacations during the tax year in question, 2021, they will say, well, you had reason to know because you were earning $50,000 of income, but you were living a $150,000 lifestyle. And so it can be hard to prove to the satisfaction of the IRS that not only did you not know, but that you had no reason to have known. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.